I believe in I eat my own cooking, and also believe that there is one big run coming for gold mining stocks where gold rises into 2024 and possibly into 2025.
Hello and a warm welcome to another episode of What's Not Priced In. As you can see, we've changed things up a little bit here again. A few weeks ago, we had the pleasure to talk to Callum Newman, our small caps expert, and this week we're going to talk about everything gold with our gold extraordinaire, gold expert, Brian Chu. Brian, welcome to the podcast. How are you?
Hey, Kirill, glad to be here, and I look forward to actually this chat because I think you caught it at a good time with what's happened with gold overnight from the Federal Reserve deciding to keep interest rates steady, and the market expecting that there could be 3 rate cuts happening in 2024.
Yeah, well, we've got a lot to get through. I sent you some notes beforehand. It was quite comprehensive. So in that spirit, to save up as much time as we can with you, I thought maybe you can just briefly introduce yourself and tell the viewers why you're so interested in gold and your gold story.
Yeah, so some of you may have actually heard my story if you've been signed on to our services in the last 2 years. Those who are new, just for benefits, I started my gold journey in about 2013 because I had I experienced the massive drop in the price of gold in April 2013 when it fell about $200 in the space of a fortnight. Now, previously, I had been a thematic investor and I was focused on the big rebuilding of society after subprime crisis. I had a little bit of gold stocks on the side, and as gold hit the records in 2011, I started adding a bit more gold stocks, but didn't really understand why at that point in time. But in 2013, I woke up to it. My primary school friend and I had lunch the weekend after gold fell out of the bed, and he explained to me about the truth behind the financial system, the fiat currency, and how that's used to manipulate the markets in a way to drive certain narratives. And being a person who sees what is right and what is true, I finally found the truth in gold. I realized that that is the original money, and I decided to put much of my family's wealth into gold, and also to multiply my gains in gold, I went for gold mining companies. Now, as I say this, the fact that I put in quite a bit of my family's wealth into gold and gold mining stocks, just a reminder for this not financial advice, and also it is a very risky type of move, almost foolhardy to some people, but that's the way it worked for me, and I hope that it can continue. So probably can talk more about that as we delve in.
Yeah, and I'm just looking at the notes, so much to talk about. So maybe obviously gold has had a strong year in 2023, so I thought we could maybe start there. And I guess a lot of investors who may not necessarily be interested in gold, and obviously investors who are interested in gold, are probably wondering, why has the gold price moved so high this year? So maybe you can explain to us exactly why gold was so strong this year and maybe what the key drivers were.
Yep. So I'm going to share my share a screenshot for you guys on what's going on. Hopefully this one's here. You can see it. The comparison between the price of gold in US dollars and also Australian dollar. So gold has been on a rising trend since July last year in Australian dollar terms and October in US dollar terms. What happened was we had the massive stimulus from the governments and the central banks around the world created a huge amount of currency in the aftermath of the global pandemic, which caused lockdowns, and lots of businesses had to either close or work at a much lower capacity. to keep the economy from collapsing, governments spend trillions of dollars in order to pay households and pay small businesses for the lost income from the lockdowns. That, of course, was funded by central banks, and we saw the debt load basically balloon during this period. Now, the funds had to find a home, so you notice that it went to stocks, it went to bonds, it went to cryptocurrencies, and it went to, of course, gold. Then in late 2021, the central banks were talking about inflation and how they had to control it. That sent the price of gold down in, as you've seen in 2021, and also when they started raising rates in, I believe it was April last year, gold fell significantly because as inflation went up, they raised interest rates much quicker. So a lot of the liquidity that was sloshing around in the market went back into term deposits, went to repay loans, and there was much less speculative activity. At the same time, you notice that this next chart, I'm showing you the difference, the movement between gold and also the US long-term real yield. So what is the US long-term real yield? It's the difference between the market's the long-term interest rate of the US dollar bonds, about between the 10 to 30 years, and the expectation of inflation over the long term. If the real yield goes up, it means that the US dollar over the long term is paying you real returns above inflation. Now, when that happens, we're saying the fiat currency system is able to keep inflation at bay, which means gold looks less appealing. So as you see, there is pretty much a negative relationship, almost 100% negative relationship. If the real yield goes up, gold goes down. Now, in the past year and a half, we saw a significant, actually 2 years, a significant increase in the real yield. That's what caused gold to fall. But in the past year, as inflation peaked and as the interest rates started to, as the Federal Reserve slowed down its pace in increasing interest rates, the real yield has actually eased back, allowing gold to make a recovery. Now, in the middle of this year, we saw that gold actually started coming back down again because inflation, despite it slowing down, looked like it was turning around and heading up again, causing the Federal Reserve to say, maybe we might still need to increase interest rates for a bit longer. That changed in October with the combination of the outbreak of the Israel-Palestine conflict and the global slowdown. So we've seen the real yield fall and gold's move back up again. Now, this is I just gave quite a bit of information there. Hopefully, if viewers found that a bit too overwhelming, please feel free to rewind and listen to it once or two more times in order to ensure that you get all the details and the gist of it.
Yeah, and we'll get into the general moves in the gold price a bit later, but now that we've sort of spoken about gold and its price movement this year, obviously you've mentioned the latest decision from the US Fed and how the dot plot is sort of implying that a lot of the officials are seeing or predicting, anticipating 3 to 4 rate cuts next year. What do you, as a gold investor, make of that, and do you think will have? How will that impact the gold price going forward?
Yeah, that's a good question because there's a difference between buying gold and investing in gold-related assets. So I remember Bill Bonner in an interview I did with him August last year. He corrected me in saying that you don't invest in gold, just as no one invests in Australian dollars, US dollars, because gold is money. But you park some of your wealth into gold if you believe that currencies are going to lose purchasing power, or you would like safety in times of chaos and war, or massive recessions and hyperinflation. Now, the Federal Reserve has largely kept gold in a narrow range in the past 2 years. Firstly, with its rhetoric on how they need to control inflation, then following it through with the fastest paced rate rise we've seen in the last 45 years. Actually, yeah, for about 40 years, given that they've made a huge rate increase in 1980 to defeat inflation from the oil boom in the 1970s and that recession in the early 80s. So what happened with gold was gold rose steadily, as we saw before, in Australian dollar terms and US dollar terms, but it didn't really quite capture market interest because they were chasing after the clean energy, electrification, green agenda narrative. We also had a lot of investors go after cryptocurrencies because they delivered millions and billions of dollars for a lot of ordinary folks in 2020 to 2021, and also even now it's starting to hot up again. Going into 2024, I believe that once we see gold break its all-time records, which it did last Monday on the 4th of December, but it didn't quite hold it. It went up to $21.30 US dollars an ounce, but dropped quickly back to $19.80 US dollars an ounce. You need to keep that, and once that happens, I believe in 2024, that could lead to more people getting into gold and buying gold-related investments such as gold mining companies. I believe that's because we've now seen the Federal Reserve pretty much put off any further rate rises, and now even talking of rate cuts. The market is going to position itself to benefit gold, benefit broader assets, and inflation, I think, is going to come back as a talking point. So I see a very bright future for gold and gold mining companies.
Yeah, and I think that's a really important distinction that you made there earlier, that when we talk about gold, some people maybe assume we're just talking about gold bullion or, the financialization of gold, but there's gold, the physical asset, and there's obviously gold, the gold miners, the gold stocks. And we'll talk about gold stocks a little bit later in depth later in the show, and we'll maybe even get some of your thoughts on some of your gold stocks you're sort of looking at or on your watch list. But I did want to ask you some more general questions about gold, because gold has been a topic of discussion for decades and for centuries among economists and investors. And I think there's at least 4 arguments that have been made for gold, for owning gold or investing in gold stocks. And 4 of them are, I'll list them, and then I'll just maybe get your thoughts on whether you agree with them or not. So I think the biggest one, the biggest case advanced for holding gold is that gold is an inflation hedge. Another one is that it's a currency hedge. Another one is that gold is an attractive alternative to assets with low real returns. And obviously another one, especially with what's been happening this year and last year, gold is also sometimes seen as a safe haven in volatile times. So as a gold investor who's been following gold for decades or decade, do you sympathize with all 4 of those arguments, or do you agree with one but not others? Why is gold an attractive investment for you?
Just for a bit of an inside pun, Kiro and I are actually quite academically oriented. We spent quite a number of more years than most universities, and when Kiro sent me a couple of his questions, I was joking. did you used to write some economics exam papers? Because some of the questions he laid it out almost as if they were like good questions for university exams, and this one is one of them. So in the past decade where I've looked into gold, I came into gold believing the most popular narrative that gold is an inflation hedge, and learned a lot about how there is more to it than just an inflation hedge. When I showed you that second chart of the relationship between gold and the long-term real yield, we can see that gold actually moves in opposite directions of the real yield, and the real yield can actually move in a tight range for a extended time, and that actually is one thing I want people to understand, is that gold is an inflation hedge in the long term, but if you buy gold to hedge against inflation in the short term, you could be in for a very rough ride, because policymakers, as we've noticed, fly by the seat of their pants. As much as they sound very intelligent in public, talking about how they'll control inflation, how the economy is going, GDP, unemployment, etc., we have noticed since 2021 that they talk from both sides of their mouth, and they actually don't have a very clear plan, and they have to sometimes, I'll almost say, eat their own words within a space of months. So with the long-term hedge for gold, that's true, and that leads me to the next point about gold as a currency hedge. In the short term, I believe gold makes a good currency hedge against the movements of the US dollar, because and not just the US dollar exchange rate between Australian dollar and the US dollar, but the US dollar against the basket of currencies. So that would be the US dollar index. Now, the US dollar index can fluctuate quite significantly over time, because we're talking about the relative strengths of the US economy, the European economy, British economy, Canada, Sweden, and Switzerland, and that's actually what the US dollar index represents. The US dollar index and gold have a similar relationship as real yield. So when the world seeks refuge in the US dollar because of certain events, let me rephrase. When investors seek refuge because of economic problems, or because there's global instability, including war, they'll run to safe haven assets, which is the US dollar and not just US dollar or gold, it's US dollar and gold. And then they weigh up whether to run for the US dollar or gold. Now, the trade-off comes down to expectations of the future interest rate that the US dollar pays, which is represented by the real yield. So that's why back in 2020, gold was a better option as a safe haven, because US dollar was paying almost no interest. Whereas last year and the past 2 years, people preferred the US dollar over gold because the US dollar was paying an increasing level of interest. So gold is a good currency hedge in the shorter term because of the relative appeal of the US dollar versus gold in periods of uncertainty. Now comes the third point: gold as an option to producing returns against lower yielding assets such as bonds, and perhaps other safe haven assets. I believe that again, this depends on the prevailing interest rate and also the relative risk and uncertainty in the global environment. In the current environment, as interest rates have gone up to current levels, which is quite high, gold is slightly less appealing. But because the market now expects that interest rates are going to fall, we will see that gold is going to be more appealing and will increasingly be so to 2024 as interest rates continue to fall. So again, gold as a alternative to low yielding assets, that depends on time. And the final one is gold as a hedge against global instability. Now the headlines in mainstream media and lots of economists will talk about how gold is a great hedge against bad things happening in the world when we have wars, we have economic collapses. My personal view is it's not a very tasteful argument for gold in that sense. I've talked about it when we had the outbreak of the Russia-Ukraine conflict last March, and also the Israel and Palestine conflict that broke out 2 months ago. We noticed that on both occasions, gold spiked up, but gave back their gains relatively quickly, even as the wars have continued and there is further fears that there could be other regional outbreaks. The reason is gold benefits more in economic uncertainty rather than sudden outbreaks of global instability. And I prefer the narrative to be steered more towards economic changes that benefit gold, lowering interest rates and central bank policy failures, rather than existential crisis in mankind that causes people to suddenly flock to gold, but that usually goes away as people realize that we aren't in a doomsday scenario just yet. And I certainly hope for our purpose, Kiro and I, we're relatively young still. We want the world to exist for a bit longer than for it to collapse in a heap.
Yeah. And I think that was very comprehensive, and I hope the viewers enjoyed it. And I think what you mentioned about the real yields, I think when you look at gold, you sort of assume you look at gold as jewelry, or you look at gold as, rings, or maybe electronics, and you don't really tie it into wider macroeconomic factors. But at the end of the day, I think the direction of the real interest rates matter a lot for gold. And in that way, the price of gold and bets on the future direction of gold really have to involve bets on where the macroeconomic direction is heading. So you do have to maybe follow what the Fed is doing, or follow where inflation is going. So it does end up quite complicated and very broad in its macroeconomic scope. So do you find it maybe overwhelming? Do you find it complicated? Do you enjoy sort of digging through and figuring out where things are headed?
That's actually a multi-dimensional question. In the 10 years that I've been in gold and studying it, I reckon I could actually write a PhD thesis on investing in gold. In fact, I'll let you guys know one thing. I am writing a book on how to invest in gold for the Australians from an Australian perspective. It's tentatively titled "The Ultimate Australian Gold Game Plan," and it details the evolution of my increasing understanding of gold and investing in various gold mining, gold-related assets. And even now, I'm learning new things each time. In the beginning, I thought that gold was a good inflation hedge and gold stocks multiplied the gains in gold. It's not as simple as it is. I now realize that there's a relationship between gold and the long-term real yield. Long-term real yield is driven by economic policy and also market expectations, and also how gold doesn't benefit in the long term because of wars. It's about economic because of economic policy and what the market believes. It is overwhelming in that sense because each time you think you know how everything works, I've got all these moving parts, I've got all these charts and spreadsheets of information that I follow. There's always something else that will come out from the left field to surprise me, and sometimes it can lead to a new discovery and a few extra thousands of dollars gain. Sometimes it's the other way around where I go, oh, well, my previous thesis didn't quite work out, and I experienced some punishing gains, which I have experienced along with a lot of gold investors in the last year and a half. But I've never stopped learning, and I believe even if you ask me 20 years' time, when my hair's when I've got much less hair and more grey and white hair, I will probably say the same thing.
Yeah, and just actually on that, so as a gold investor, is your portfolio strictly in gold and gold stocks, or do you sort of hedge and diversify into other assets or other stocks or other ETFs?
Yeah. So disclaimer here, not financial advice, and also a little bit of talk about my own what we do personally with our family. My personal my own brokerage account is predominantly gold-related investments, whereas my wife does a bit of hedging for our family and buys into the broader resources sector, a bit into biotech, and also whatever is popular at that point in time. She's a more steady investor than I am, and I think much to our benefit because being heavily weighed in on one sector, of course, most people understand that putting all your eggs in one basket is pretty dangerous, and you can actually have very wild rides. We also own a bit of precious metals, not stored at home, mind you, so don't come knocking on my door. We keep it in. We also keep it in the deposit boxes for safekeeping. That's our fundamental wealth. It is our aim in the coming years that we go and buy a bit of property. We currently don't own any because we like to focus on precious metals and mining stocks at the moment. But yes, we are a bit diversified, but me personally, I'm heavily invested in precious metals and mining stocks because I believe I eat my own cooking, and also believe that there is one big run coming for gold mining stocks when gold rises into 2024 and possibly into 2025, given that we are seeing the global economy recognize that a recession is coming, and central banks are looking to cut interest rates, hopefully before things start coming down in a big way.
Well, actually, yeah. On that, you mentioned the word recession. So
yes.
Obviously, I think in recent months, especially, markets have downgraded their expectations of recession. Obviously, for a while in the first half of 2023, a lot of people were calling for a recession, and now in the second half, it's sort of now being called the recession that wasn't, or the big recession that was predicted and never ended up happening. So, do you think that there will be a recession, maybe say in the US or in Australia in 2024?
So I believe you did your university degree in economics or something related to it, right? Yeah. I'm not sure whether you've heard the joke about the famous saying, an economist is an expert who will know tomorrow why things they predicted yesterday didn't happen today. I remember reading that quote back in high school, in fact, in year 7. And I used to not quite understand. I just thought it was just a dig at economists. But as I spent more time, I realized most economists, like that statement rings very true for not all economists, but the economists that get to appear on TV and get the important positions in government. In the Assembly of Fat Tailors, which we had earlier last month, I made the joke where I said that we are in a recession. Everyone knows it's a recession. The last people to recognize it are politicians because they have a vested interest in not recognizing recession under their watch, and economists because the ones that get hired to do the job are hired by politicians to talk their line. I believe we've been in a recession since 2020, and we haven't come out of it, and we're actually digging deeper into it because, Kiro, I was in Hong Kong in the past month to visit family, and I haven't been there since 5 years ago. And I can tell you, I was paying Sydney prices in Hong Kong when 5 years ago I went to Hong Kong and I'll be paying 30% less than what I would pay in Sydney. And that's why we used to like going to Hong Kong to buy up things and to almost enjoy holiday like a king. But this time around, totally different story. And furthermore, people in Hong Kong, the average pay in Hong Kong is about 30% lower than in Australia. So we're talking about people in Hong Kong being 30% poorer in the past 5 years. Now, the official financial figures would tell you we're not in a recession because the GDP is still kind of like positive, or it may have been negative for 1 quarter, but it's not 2 quarters of negative GDP. And in fact, worse still, Janet Yellen redefined what recession is, I believe, last year, when you have to change the definitions and you also have to change the way you measure official financial figures and economic figures. That tells me you're trying to sweep things under the carpet. I believe 90% of the population knows that we're in a recession because people are not getting pay rises, their bills are up, they have to dig more out of their bank account and also their savings to make ends meet. So I believe that 2024, the politicians will recognize a recession when everyone's living in a depression. And if they recognize a depression, most people are out on their butts. And I certainly hope to be wrong, but I believe most of us are living the reality of recession, and we're just waiting for the politicians and economists to come clean. So if we're wise, we should have been making preparations. And I'm trying my best by taking positions in with gold and also with gold mining companies. And I know my colleagues and my friends and family, they're taking precautions in whatever ways they deem possible. Some have gone to crypto, some have gone to stocks, some have taken another job, and some are buying a property where they can or paying down their debt. Whatever means they believe works, but I believe recession, everyone knows we're living in one, and it could get worse next year.
Yeah, well, that's pretty gloomy. We'll revisit that prediction maybe in next year in another podcast. But
yeah,
you mentioned gold stocks, and yes, I'm really excited to get your thoughts on gold stocks in general and for 2024 and beyond. So obviously you've talked us through how gold has performed. How have the gold ASX stocks performed this year?
And let's have a look at this. So let's have a look at this screenshot I've got of the ASX Gold Index. So those who've invested in gold stocks in the past 2.5, 3 years probably are feeling quite weary, and some might even think that maybe it's one of the worst investment decisions they've made in their investment career. Now, don't feel bad if you are actually maybe 30-40% down on your gold stock portfolio. You are not alone. Some investment professionals, fund managers have talked about how these 2.5 years have been the most difficult in their career. And it might not look that way when you look at this ASX Gold Stock Index because, hey, since the beginning of 2021, the ASX Gold Index hasn't actually moved. But what happened during this period is that it went on a roller coaster ride. It dropped to 42.45 in, I believe it was mid-October last year when it bottomed. But this is for gold producers, and it's weighted towards the better performers. So if you held your Northern Star, Evolution Mining, Gold Road Resources, you're probably up at the moment, and you'll be pretty happy with yourself. But if you ventured more into the smaller producers or even the developers and the explorers, where they fell as much as 70 to 90%, and some explorers are trading at 90% losses to what they were in mid-2021, you would actually feel that you would feel almost as if you're a loser. But mind you, you shouldn't feel that way unless you've sold and crystallized those losses. I've experienced this in 2013 to 2014 when I cut my teeth into gold stocks and bought as prices came down sharply, and I was sitting on 70-80% losses on some of my gold producers, let alone gold explorers, which at that point in time I didn't touch because I didn't really understand much of it then. I understand it better now, and I've actually got quite a bit of gold explorers at the moment, which are down heavily. I feel more confident about them next year. I'll explain more about it when Kirill gets to it. But for what's happened this year, Australian gold stocks are up 22% because of the rising price of gold and also the weaker Australian dollar, whereas US dollar gold has actually gone up only 11%. And that probably explains why we haven't experienced a broad recovery with gold stocks, because most of the financial press is talking about US gold stocks. And US gold stocks at the moment, they still haven't entered a bull market this year. And that's why the interest is still on other mining stocks rather than gold stocks. But should the US gold stocks rise another 5 to 10%, I think that is going to send more eyeballs onto gold stocks, and that could spur a significant bull run into 2024.
Yeah. And you mentioned this at the start, and I think maybe I'd want you to elaborate a little bit for some of the viewers, because there is a big difference between gold and gold stocks. And even if gold is rising, it doesn't necessarily mean that all gold stocks will rise, because at the end of the day, gold stocks are individual businesses, and businesses have their own imperatives and issues. Some businesses are better than others. So maybe you can maybe talk more on that to viewers who may sometimes think, well, gold is hitting historic highs. Why is my gold portfolio of stocks not really doing anything?
Yeah, and that's a good question you asked, because I can relate back to my own experience in learning the ropes in buying gold stocks in 2013, 2014. I asked the same question. In 2014, gold started making a recovery, but gold stocks made new lows. And what gives? I looked into the relationship between the price of oil and the cash flows from operations earned by gold producers, and realized, hey, as companies make a better operating margin, then gold stocks are going to recover. But what drives it is, on the revenue end, as gold goes up, they earn more in selling their gold. But on the other end, in the expenses side, they run a lot of machinery, and the wages that they pay to their staff is roughly driven by the oil price and also the underlying inflation levels, which is also driven by the oil price. So then I studied the gold to oil ratio, and I found that to be a better indicator of the near-term performance of gold producers. And if gold producers perform well, it earns it attracts more people investing into gold stocks, and that's also going to drive up the prices for developers and explorers. Now, my analyst who's worked with me for 2 years, he delved deeper into the gold to oil ratio and found that there is a 1 to 2 quarter. It actually can look forward. It can actually predict to some level of accuracy the upcoming performance of gold stocks in the next quarter to 2 quarters, and that's what I focus on a lot more in deciding whether gold stocks are looking good or otherwise. And this year, the reason why gold has gone up while gold stocks haven't done so well is because the price of oil was rising. I think at the start of the year, it was rising, and then it dropped from April to July. Then it started rising again till October. So that actually caused a lot of gold producers to report higher operating costs. And I'd like to highlight that the June quarter was especially disappointing when many of these gold producers reported cost blowouts, even as the price of oil started falling. But it went the other way for the September quarter, which was interesting because oil was rising from July to October, and I was bracing for a pretty bad September quarter. And these producers actually went against the trend. And now with oil prices falling in the last 2 months and the gold to oil ratio going up, I'm bracing for a much more positive December quarter, and we're going to find out more next month. And I believe with the global recession coming, I believe the demand for oil could further decrease, even though the green agenda is trying to phase out fossil fuels. But I believe that the green agenda itself is heading out the door because the impracticalities of phasing out fossil fuels and moving simply to hydrogen, which is an emerging technology, or solar and wind, which can't produce baseload electricity, we're going to see oil production resume into the coming years, and I think oil should maintain its current prices rather than spike up significantly. I could be wrong, but I believe the future for oil continues to remain bright, and that's going to spur more oil production, which could be beneficial for gold producers because that would lead to the gold to oil ratio maintaining its current levels, which would deliver better profit margins for gold producers.
Yeah, and I think that's probably a nice takeaway for viewers there. I'm guessing not a lot of them have maybe heard of the importance of oil for gold stocks, and the gold oil ratio is something maybe a good takeaway there. And I guess what you said, gold miners can't control the price of gold, so what they can control is how efficient they are, and obviously maybe the best businesses are the ones in this industry are the ones that can control and lower their costs, so they can make money even if the gold price isn't at historic highs. I actually did have just a quick question with the gold to oil ratio. Do these companies hedge their oil exposure? So, for example, if the spot price of oil falls sharply, that might not benefit a company if they've already hedged it at a higher price for the next 6 months, say.
I'm glad you actually asked this. In fact, you read my mind, because when you first said gold producers can't control the price of gold, but they can control the expenses and all that, I was about to say, well, while producers can't control the price of gold, they can control at least to some extent the price range in which they sell the gold. Now, the issue of hedging, where gold producers enter into an arrangement with an investment bank or a hedge fund on delivering gold at a fixed price into the future. This has been a controversial topic because in an environment where the price of gold has been rising, several gold producers in Australia, with the exception of a small handful, I believe it's West Gold, Evolution Mining, West African Resources, and Regis Resources, and a couple more, most actually have significant hedging arrangements to fix maybe 10 to 30% of their quarterly gold production in a fixed sale arrangement. That has stifled the profitability of many of these producers who hedge their sales. But when the price of gold falls significantly, like it did in 2013, 2014, those that hedged actually had an advantage, and they were the safer bet, because sometimes gold can fall so quickly that the prevailing price of gold could be below the cost of many of these producers. And I was listening to a podcast on Monday, I believe it was, on Palisades Gold Radio, with I think a gentleman, first name Jonathan, surname I don't want to butcher his surname, but he was talking about how he believes that the next run on gold may come with gold dropping to as low as $1,600 an ounce, which is the average price of production for the producers, because he's seen that pattern emerge in the past. It happened in 2015. Before the next run on gold fell to the marginal costs of the producers. And if that happens, I hope it doesn't. If that happens, hedging is actually going to be an advantage. But most gold producers are actually trying to get out of their hedges because they expect gold to go up further into 2024. In fact, on Monday, Regis Resources paid $98 million to get out of his hedge of, I believe it has 63,000 ounces at 1571 Australian dollars an ounce, which was a legacy arrangement that they had since 2009, when the company borrowed to build the Duketon operations, and as part of the loan, they had to hedge future production. Regis Resources tried to delay selling these gold at a lower price to the prevailing price, and by kicking the can down the road, they hit a brick wall. And that was probably one of the reasons why Regis Resources share price didn't recover like Northern Star or Evolution Mining did as gold went up, is because they had these hedge contracts and the forward contracts. And at such low prices, the investors were basically saying they're going to have to fork it out, or they're going to have to delay earning what they should earn on their gold production, so we're not going to buy. But now Regis Resources have bit the bullet. Good on them, even though a little bit too late. But I still give them credit for finally doing it, because that is also a signal for why I believe gold is going to have a very strong year 2024. Regis Resources is paying out of their pocket to get out their arrangements to benefit in next year's gold bull run. So that might be an insider giving you a hint of what's to come for gold.
Yeah, I was just about to say the gold miners unhedging is probably a bullish sign, because it's in their interests. So if they believe it's safe to run spot prices, then it's obviously suggests they think gold price will continue to remain strong.
Yeah, just to add the point very quickly, is if you look at the share prices of the producers that are unhedged, they're the ones which have actually made the run earlier in the last 3 months, even as gold producers have been trading in a tight range.
Yeah, and I'm aware of the time. I don't want to keep you for too long, so I think maybe in the final segment, maybe we can talk about some of the stocks, maybe both producers and explorers that have been on your watch list. And obviously, this isn't financial advice in any way. This is just the stocks that you've been interested in or that you've been following.
Yeah. So the case for why I believe gold stocks have a very good year, should have a very good year for 2024, is I believe that there is a big valuation gap between the performance in gold in the last 3 years and gold producers, as represented by ASX Gold Index, which is in orange, and even more for gold developers and explorers, which is the blue line, as you can in a figure. Now, for gold producers, those who don't want as much risk, they might want to go for gold producers. And the companies that I personally am paying close attention to include West Gold, Genesis Minerals, and Ramelius Resources. Now, West Gold, reason for West Gold is that they have come out, they have actually, they're unhedged now. They have turned over a new leaf with their production. They used to be quite a marginal producer, and they were spending very big on developing their Big Bell mine, the Great Fingal mine, and also Fender. All those are now complete. They're producing, and they are going to likely deliver more profitable operations into the coming year. For Genesis Minerals, very interesting story, this one. Rayleigh Finlayson took over the company, I believe, in around September 2021. And then Genesis Minerals transformed from a $160 million company to $1.8 billion today. So a tenfold increase in the company size in the space of 2 years. Today, they announced that they bought the Bruno Lewis deposits that Kidd Mining owns. Genesis Minerals is going to consolidate the Leonora region. They bought the Gualian mine from St. Barbara in July. They have expanded their properties around the area and by buying Dacian Gold, and also now the Bruno Lewis deposit. I believe that there's a very strong future for the company, given that they're actually embarking on this strategy to consolidate one area. And I believe that they could have Perseus Mining and even Evolution Mining a run for their money in the next 3 years. This is my personal opinion only. It's not financial advice. It's important to do your own research. And also talked about Ramelius Resources, I believe. Ramelius Resources, they are also consolidating their area in Mount Magnet. They bought Musgrave Minerals early this year. They bought Breaker Resources before that. And they've got an undeveloped deposit in Lake Rebecca. And I believe it was Lake... Name just escaped my mind. The one which they bought from Breaker Resources. That's going to... so Ramelius Resources is embarking on a period of growth. That's going to be quite significant into the 3 years. On the Explorer side, much higher risk, this one. And I believe those who venture into this, please make sure that you don't jump head first, because these companies are very early they're in the early stages of a mining life cycle. Companies that I like include Black Hat Syndicate. They are in the process of restarting the Paulsens mine in the Pilbara region, I believe. They are fully funded for this now, and the market basically seems to have they haven't priced it in, and many investors who jumped in early are feeling the pain, but I believe they will enjoy the significant gains once Paulsens restarts, and the Coyote mine is the next one up on the next cab off the rank. One more, I'll probably give out one more explorer which I'm pretty positive about, and it's Great Boulder Resources. Great Boulder Resources is in the Meekatharra region, so in between the Leonora region in Western Australia and the Murchison region. So they're in the line of sight for nearby producers who might be interested in taking them over. They've got a pretty good deposit in Sidewell. They've actually reported a maiden resource early this year and then confirmed an increase in resources. Pretty high grade for a pretty shallow resource. Market cap is currently about $40 million, and they've recently raised $4.5 million of capital to bring forward their development. So these 5 companies are ones that my subscribers are focusing on. There are many more recommendations in my services, and there's hopefully plenty more exciting prospects to come. I believe that we're close to the bottom, or we've already seen the bottom for explorers. So those who are willing to jump in at this time, it could be the best decisions that you make in your investing career. And I look forward to seeing some of you guys join us in my services.
Yeah, and just for those who are interested, you've got 2 services, obviously the Australian Gold Report and the Gold Stocks Pro. So if anyone is interested, they can check out those services. But Brian, it was a pleasure having you on. I've learned a great deal. I'm sure others have learned a great deal too. I wish you a Merry Christmas. I may or may not see you at the company function, but it was great having you on, and have a great day.
Actually, I'll be there next week, and I look forward to it. And Merry Christmas to our viewers, and blessed New Year as well.
Yep. And if this does become the final episode of the year, I wish all the viewers a massive... Well, I wish them well, and I just want to say thanks for all of the support, and it's been great. And on to better things next year with the podcast.